I used to think that volume was kind of like a made up sort of indicator, like just something people put onto their screens to make up a reason why price moves. And if you're using it on Forex or crypto, that honestly kind of is the case. But when you're using it on something like futures, it becomes a complete game changer. In this video, I'm going to talk to you about my most used volume based indicator, and that is the volume profile. So the volume profile is a tool that we use to show the distribution of volume across an entire range. On the chart, you can see a volume profile that has been drawn. Now this histogram, which is the volume profile, is going to show us areas of high volume, which we can see by volume or areas that stick out more on the chart. And then we have another area of high volume here, and then areas of low volume, which you can see there are not many bars sticking out in this sort of section. So these are areas of low volume. There's also a drop off in volume down here. And then we also have something that's called the value area. So the value area is denoted by these two blue lines here, which basically denote the bottom end or the value area low and the top end or the value area high of the value area. And then you can see what volume is included in the value area because it's a different color to the rest of the profile, which you can do in your settings of the indicator. Now the value area is important because that's the area where 70% of the volume for that given range that you have drawn with the volume profile has occurred. Now how the volume profile actually calculates this is by using something called tick volume, at least on TradingView. If you're using a professional platform like Bookmap or Jigsaw or MotiveWave, then it's going to do it a little bit more accurately, but tick volume, at least on futures, is a very, very good proxy to actual volume and more than good enough to use for your actual trading. So what tick volume means is every time price is ticking up or down, imagine these are candles, price is going to be ticking up and down, and the tick volume is going to count each individual tick. Now, I don't just mean each time it moves one way and it's going to count 4 ticks for every time it moves a point. It might move a point, but during that move, there are lots of little micro ticks back and forth as it's moving, especially when you're in a high volume area. All those ticks are going to add up. So on your chart, price might only move 1 point or 2 points, which you would think is 4 ticks worth of volume or 8 ticks worth of volume. But because of all these little micro moves back and forth, ticking up and ticking down along the way, what looks like one smooth move might actually, because of lots of volume, or at least tick volume coming in, might actually be 20, 30 ticks worth of volume. So that is going to make that volume stick out a lot on that histogram. And because what is causing a lot of these micro tick movements is trades being executed and real volume entering the market, tick volume ends up being a pretty good proxy for actual traded volume, at least on futures. This works on futures a lot better than it does on Forex because on futures, everyone's orders are coming into one exchange. On Forex and crypto, where we have uncentralized exchanges, depending on what broker you're using, depends on what data you are using. Whereas on futures, you know for a fact that you have access to all of the data. That's why it works so well on futures. And then the final level we have on the profile is the point of control. This is the red line and the most traded point in that profile. So this is what we determine as fair value because it's where the most amount of people were buying and selling in that given range, making it the point of control. And the point of control will act as sort of a magnet for price. Price is going to want to move towards the point of control. But if this profile is still developing, the point of control might move around the profile. And that can obviously have some implications depending on how it moves, why it moves, all things like that. I'm typically not trading off of the point of control just because of its nature. It tends to encourage more consolidation, more kind of sideways movement around it because it's fair value, right? It's where traders have agreed the most, therefore it's where consolidation or balance is likely to be seen compared to the value area low and the value area high, which are my two favorite places to trade off of because this is the drop-off point where 70% of the volume has occurred. So naturally, when we approach these levels, there's likely to be some sort of a reaction. If we're trading up to it, we might bounce down from it at least a little bit, and then if we're trading down to it, we might also bounce up from it. These are very common trades using volume profile. They're referred to as value area fades or rotational plays. And all that means is just fading the 70% extremes, high or low, of that value area. So now you know what the volume profile is and what it looks like. Let's show a real example of what it looks like when you print it over price action. Now, there are specific times that you need to draw the volume profile to get the best, most accurate levels. And that's because we want to get all of the institutional activity, at least for this profile I'm going to show you, so we can see where those big players, those institutional traders, are active in the market. So for the New York AM session, you're going to draw your profile from 9:30 New York time and then you're going to drag it across all the way to 359. Now this is on TradingView, you drag it till 359. You don't drag it until 4 or 4:15 because there is a major drop-off in institutional activity at 4 p.m. So we drag it to 359 because that 359 candle is going to close at 4 p.m. exactly. If we were to drag it until 4, we'd actually be dragging it until 4:01, if that makes sense. So all this price action after 4 is basically just noise. It is volume that is not a part of big institutional players' activity and therefore could skew our levels so they're a little inaccurate. So if you do it to these times, you should get perfectly accurate levels. Now, how can we use this for the next day is we will plot the value area low, the point of control, and the value area high. PD just stands for previous day, so I know that these levels are for the previous day's New York AM session. Because I will extend multiple profiles and do this with them, so I need to know which levels are coming from which profiles. And now the real beauty of volume profile is this. If I scroll just to the right to next day's trading, which was the most recent Friday, you can see that overnight we obviously extended above these value levels, but then into the open, we dropped right into the previous day's point of control on ES. And you can go test this with your charts. You can draw the volume profile exactly how I've just shown you and extend those levels that I've just shown you, and you will see this exact same thing. Now, this might be a trade, this might not. It depends on how you want to trade volume profile, but I kind of just wanted to do this to show you the power of the volume profile. But like I said, I will put more than just this previous day's profile on my chart when I'm trading, and if you want to see me trading, then make sure you subscribe so you don't miss out on any of my live streams. And yeah, that's kind of all I have for you boys in this video. I've explained the volume profile, what it is, and what the different compartments of it are, just simply the basics. And then in future videos, I'm going to delve into a bit more depth of like how you can actually enter trades and what sort of different things you can tell from the volume profile. I am very new to volume profile still, so that's going to take some time before I feel comfortable enough teaching those sorts of things. But if you want to come and watch me trade on stream, you will see the process basically of me learning this. And if you're wondering what prop firms you should be trading with this strategy, or honestly any other strategy, then go and check out my most recent video where I talked about the best prop firms for 2026. But that is all I've got for you boys in this video, so I will leave it there, and I will wish you good luck, good trading. Catch you later, boys.